Didn't get to what I wanted to last night, but we are about to go in this morning. All right, we are about to go in this morning. So get here. All right, so that's good. Got my stream up. That's good. Kind of expected this. Let me see something. Let me get a little bit of tunes going. All right, it's good. We good. We good. Drink my water, and then we're about to get into it. News just came out. That way I don't hear myself twice. Can't stand when that happens. All right, one thing I wanted to check. Pull this up. All right. I'm gonna get my drink of water. Get my energy drink. Hit some push-ups. Probably be on the call around till around 8 today. I got a lot I want to share, a lot I want to go over. And then the freaking markets are open, so let's get it. All right. First off, good morning. Good morning. Good morning. Good morning. my interactive brokers, I got a little trick that I'm gonna do. Because I don't want to have to use my interactive brokers. Um, Let me do this. In terms of my chart. And so what you can do is you can actually take off like parts of your interactive broker account. And so that is what I have done here, except I don't want to put it there. Um, I'll have to do this. I don't want to do that either. All right, at least only thing I have to do to hit buy or sell is click in it and open it. But yeah, so if I like I don't want to use my screen, my interactive brokers chart, made that decision. Um, but then if I actually put this over my trading view every time I click on it. Every time I click on my trading view, it goes over it, right? So at least I have like I can still click in here and kind of jot something down quick about that pair. And then I have my trades down here still. Only thing that changes is I'll have to click in here and then hit buy or sell. Good thing about it is if I need a buy, my buy is right there. Uh, so I actually want to check something out real quick. Check something out. I'm gonna place my first order on Interactive Brokers. Make sure that I know I execute this correctly. Try something. All right. So I'm gonna enter buy here in a sec. This is what I want to enter. Um, for a few reasons, which I'm gonna get into here in just 1 second. Um, I just wanted to see what would happen here in my volume. I actually will wait for a correction, but I want to get into the news. I don't even want to. It's my eagerness to try this new platform of the trading platform. So this is the first day that I'm back live with my trading account. Um, Interactive Brokers is where I'm executing my trades on now. So that's the platform that I'll use for until something like dramatic happens. Honestly, I've had let's see, I've had two different brokers now. Like this will be the second one. So I was only using one other broker before this. However, I've had a handful of prop accounts with different companies, Search Trader, the Fivers. Uh, those are the two major ones, the major entities actually I dealt with. So I would always once I get a good relationship built somewhere, right? I don't want to have to keep developing a new relationship and all that. Like I'm good where I'm at. So that's why. So the firms that I did have for my prop accounts, and all a prop firm is, if you're unfamiliar with it, is you pay X amount of dollars, and a firm, a proprietary firm who has a broker, right? So they're not a broker. Most of them are not brokers, but you pay $100. They send you through either a 1 or 2 stage challenge, sometimes three, where you will have the opportunity to pass that challenge, given that you can show that you are a profitable trader. Um, you'll be able to pass that challenge and get access to X amount of dollars in funding, still with rules and regulations behind that funding. But yes, you will get access to that funding. Not like, just let me retract this statement. You will get access to the buying power, right? Not the funding, the buying power, right? And then once you pass the accounts and whatnot, that's when the funding you profit is either an 80-20 split or 70-30 split, something like that. But there was just so many regulations, so much stuff behind the scenes that we had to worry about with those prop firms. At least in the US, which steered us away from dealing with that. At least steered me away. And then thinking about, we talked about it in live call 250, um, with one of our community members, just opened up our minds to something that we were just overlooking. It's kind of like, something when just just peeking over, you're like, oh, hold on. There's something right in front of us that we're disregarding. So yeah, we were overlooking a few aspects. Since then, a lot has changed. Not a lot has changed. I won't say that. Um, but since then, we went from the prop firms that we not prop firms, but prop accounts we were going to get with a broker that we already trusted, an established broker that we trusted. Um, and instead of doing that, we took a step in the in a different direction and got with a regulated broker. So this is a broker that we can verify is regulated. And then instead of doing the prop account, um, just funding our accounts. Because the beautiful thing about Forex, and I always like talking about this with people that trade, um, is, dude, you can put $20 into your Forex account and genuinely grow that $20. Like genuinely grow it to 30, right? And if you grow something from 20 to $30, what did you just do? You just profited 50% of your account. So it doesn't matter if it takes a month to grow $20 to $30, right? $10 increase. It doesn't matter if that takes a month, because what is that showing? That is showing you can take small amounts and increase no matter what. You're bringing an increase. Even if you can turn $1 into $2, that is an increase, right? And so the beautiful world of compound interest, the more we can just do that, and we pick a certain percentage that we're after each day. Some days we'll get more, but just giving us some type of aim, uh, the stuff that's within our trade plan, which is actually something, I need to look back over. Um, I have not taken a look at it in probably a couple weeks. Um, Now within that time frame, we've been making the transition. I haven't taken any live positions, um, and so as I'm getting back into it, I'm ready to go. I'm ready to go. So okay, order size exceeds the limit size of 500. Okay, so what this is telling me is the order that I'm putting in is too large. Oh, so I can do 500. Yeah, because 1400 units is actually 1400 units is actually what I want. So you can just type it in. Okay. All right. Let's get into it. Let's get into it. Let's get into it. So broker, that's what's on the right. Don't be alarmed by that. That's where we're gonna start hitting buy and sell. Um, News just went off at 5:30. Let's get into it. Let's get into it. I want to bring up my annotated bar here. All right. So heavy hitters right here, right? Wednesday, September 11th. Um, you know, definitely want to give my condolences to this day and those lost. Um, loved ones lost on this day. So definitely want to send my condolences, thoughts, and love to those that this day is still affects many for the ones that were lost uh, and whatnot. But we got CPI in the month of August. We got core inflation rate month over month. We got inflation rate month over month, and we got inflation rate year over year, core inflation rate year over year, and CPI in August. Not sure the difference between these two and this bottom one here. Truly don't know. But one thing I do know is I'm paying attention to our consensus and our actual. Those are two areas that I'm focused on a lot over today, tomorrow, and then next week's news as well. And then as I look at some of the other countries' folders as well, that's what I'm focused on. It's consensus versus actual. Consensus versus actual. Because what is that telling me? That's telling me what they project versus the result. And so as we see here, we don't see that the result was very far off, right? It wasn't very far off. What does that indicate? That indicates whatever the data is telling us, but it does also indicate the not gonna say decreased volatility, but when we get those really, really insane spikes that we're just like, wow, how did that wick even happen like that? It's generally because these two numbers are very far off from each other, right? So that's good there. Core inflation rate month over month, we got a 0.1% increase in that, which is a better than expected result, right? Which is a better than expected result. And I'm not really super focused on. There's one folder that I'm really focused on, but if we just look here, the core consumer price index, which is the core CPI, right? So when we see that on like Forex Factory, that's what that is. It analyzes the changes in price that consumers spend for basket of commodities, removing food and fuel from that, the food and fuel expenses in that, right? So that's the core CPI. That's these will kind of go uh, this one here, the core. This is the core CPI, separate from this, right? And then we got inflation rate year over year and month to month. And this is honestly where my focus is at right now is this folder. Inflation rate year over year, consensus and actual. This is gonna tell me what I need to prepare for come next week. This is my analysis, right? This is not analysis that I'm taking from anyone. This is what based on the last 3 months of macros that I've dove into. seeing the market play out with preparation for this time of the year. And now what I just came up on not too long ago was understanding that September is a very important month because it's the end of the fiscal year. And then that's when, how I'm viewing that. Well, we can assure, we can know that at the end of the fiscal year, this is when new spending packages are generated. But what I think about too is all the old ones, right? Is all the old spending, packages um, that were in the form of either government bonds that now their terms are going to mature, or they need to either yeah, do something called a repurchase agreement, which, from my understanding, is they basically terminate that specific term of whatever yield or bond, but they put that amount into the next one with another purchase agreement on top of it and re-rate it and then repurchase it essentially. Um, so I that's kind of what I'm thinking about, a number of different things that I've come across on the way to this understanding that I currently have now with preparation for this time of the year, right? And it's just a little, I mean, it's a little loud in my headphones. With preparation for this time of the year, right? So, uh, inflation rate year over year. Why is that important? Because that's, in my opinion, that's ultimately what's going to gauge how deep the Fed is going to cut their rates. And right now, we don't know exactly how deep they're going to cut their rates. We see their next meetings in 7 days, but we don't know how deep they're going to cut their rates, right? And we see this number keeps fluctuating in terms of rate cuts. Um, this down here, like they keep, and the percentage, right? So this is saying that it's an 85% chance the Fed is going to cut their rates to 500 to 525 base points. And then the other one says a 15% chance they're going to cut to 475 to 500 base points, right? And I wish I would have looked at this yesterday, but I wanted to see what this was at prior to this inflation rate year over year. And what I think is that this number was a little bit higher, um, because they maybe wanted to cut the rates a little bit deeper. But what happens with such deep rate cuts? It's just increasing borrowing, increasing the money supply, right? Decreasing the value of the dollar. And that is the goal. So the goal is to um, essentially put more money back into our economy some type of way, while increasing productivity growth, which is going to increase our economy again as well. Um, but then we think about the trade deficit, right? And the cost it is currently for, um, you know, other countries to engage in transactions with the US. I would assume that it's more expensive right now. And so with this inflation rate year over year, the consensus was that this was going to be, I hate that it just pulls up when I click on it. I don't mean to, but so let's see, the consensus for the rate cut was 2.6%. And that was the previous to 2.9. And so the Fed always mentions their 2% goal for inflation, right? 2% is always their goal for inflation. And now one thing he does mention as well is he always mentions the two terms overheating and cooling off, overheating and cooling off. And when something is overheating, I kind of look at that as kind of like our inefficient price action. Like it's over it's overbought, or it's too high, or it's um there's too much increase, right? And when it's cooling off, that's when it's kind of correcting itself, and it's finding a balance. Now I know there's some issues with when the market is cooling off too quickly, right? Of how that could affect things as well. And then on the other side of that, when it's heating up too much, when it's overheating, right? And so when I think about a number like this isn't a number that we honestly want to see fluctuate too much, because that could be a sign of one of those cases where it's kind of already spiraled out of control, right? So it might be one of those cases where it's cooled off too quickly, right? Uh, and so previous year 2.9, the forecast was 2.6 is what they wanted to see it at. It was 0.1% less than their consensus, which isn't substantially off, but it is still worse than what they wanted it to be. And since this is a very pivotal number, right, to the future of what could happen with the interest rates, that ideally would want to affect this number in a positive way. Uh, Seeing this come out point 0.1 lower than the forecast, I want to see if it has already adjusted this number or will adjust this number. If it has already, what that's telling me is that the economy is cooling off too quickly. So um, the decision is leaning more on the side of just a 25 base point cut versus a 50. A 50 would increase the money supply more, right? So that is kind of where I'm running into the where I'm talking about the cooling off and the overheating aspects. If we cut at 50, this could cause that to spiral even more, right? In the direction um that we want it to go, but eventually we want it to stop at that 2%. We don't want it to keep going below that 2%. Um, because once it gets to zero, the Fed really has no room to go to stimulate the economy. And that is the goal here, to stimulate the economy, increase buying, increase borrowing, increase spending, increase productivity, increase growth, right? That's how I'm looking at that. And so, like I said, about a 1.1% difference from the expected result. And I'm going to look at this as the economy is potentially cooling off a little too quickly, to where those rate cuts will have to get, the 25 point cut versus the 50, just to inhibit the potential for this to get out of control. I think that's just a safe way to go about it, because the thing is, right, they have another meeting on the 7th, another meeting on the 18th of December, and they've already kind of hinted from the articles that I've seen, which I assume is from the transcriptions from or the actual speech that those people watch or attend. Um, they've hinted at two rate cuts this year, right? And so there's three opportunities remaining, and they've kind of hinted at two rate cuts this year. So we don't need to get it all back in one rate cut. But we can utilize this number right here to kind of pre um, determine for sure one thing, that the rates are getting cut, for sure getting cut. And the other thing is just how deep, because that affects things as well. Um, and so when we look at the charts, right, this is a perfect time, and that we're getting back on the charts actually, as I open this up here. And so this is this is USD JPY, right? So what am I seeing on USD JPY? Let's take a look at my daily real quick. This was honestly perfect. This happened exactly the way I wanted. Um, this was so money. Let's get rid of that. Don't forget that. Actually, let me get that rid of that. This was so money, right? I had this weekly area, and I was talking about this for quite some time, right? And I talked about this weekly level, and I was mainly speaking on that liquidity right there. That I was really really confident that that area was going to get swept, right? That area was going to get swept. And what did it do? Clean sweep of that liquidity area, right? And why is that area a liquidity area? Because of this wick, and that this all this means is at this level, buyers stepped in heavily, right? And this is a good level for buyers to step in at. Why? Because of the decision-making level, right? That we're seeing on this weekly area. It's a decision-making level, right? And we see that buyer stepped in at that decision-making level. Boom, stepped in. But then we see sellers came in, took out that liquidity, and now they're still respecting that decision-making level though, right? Also giving me that indication on my MACD, even though this is the weekly, giving me that indication on my MACD that we even on this one, that we are potentially starting to lose our sellers volume, right? Which is perfect for what I want to see right now, kind of. And so that's nice there. And so then let's go down to my 8 hour. Right. So my 8 hour still indicating that same thing on my MACD, right? Just got a strong bullish buying candle on that 8 hour. So just think about us buying off of this strong area here. Let's go down to the 1 hour. 1 hour, we see the inefficient area of price action there on my one, right? Decision making zone right here that we're on my 1 hour. So I'd want to see how price reacts to this level here. Because ultimately I am eyeballing liquidity, 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 and liquidity, right? With some inefficiency right in this area. So I want to see price get up to here, right? And then is it gonna, from there, it could do one of these, bounce off this level and then head back up. Why am I considering the head back up? Um, because we're looking for an increase in the view on the dollar. Um, so if we're getting some bullish action on our DXY, like we were here, we'll be getting that bullish action, same type of move on our USD JPY, right? When I look up actually one thing too and see what's going on with JPY. USD JP and JPY has been climbing, right? Just climbing. All right, and this is the 1 hour on JPY, so it looks like it's actually about to run into let's see here. It's about to run into this decision-making level here. This is Matif, however you want to say it. But what this is viewing is just the Japanese yen. So instead of USD JPY and the um, buying and selling of those two currencies, we're able to just view JPY, right? Similar to the way we just view the DXY. Um, but we're just viewing JPY. We could switch this over and just view USD as well. But I kind of already have something on USD, so I don't need to be watching USD. I want to know the strength that JPY has against the, and then I can use that to understand how it's gonna affect our dollar chart. And I'm gonna go blow my nose real quick. It looks like we may be getting some correction towards this inefficient level as well. This is so this inefficiency, this orange box, right, is what my 1 hour has. Is this 1 hour inefficiency? But this is just the level that it is on my 1 minute chart. So I'll be right back here one sec. All right. So this is actually beautiful. What's just correct? This is actually beautiful here. So what am I seeing? What am I looking at here? You're looking at price move on that 1 hour decision making level that I just created, right? So where did I find that? I found that 1 hour decision making level right there, right? You see that three candle structure that I'm looking at? Boom. So the traditional engulfing, right? That retail traders. I'm a retail trader, but there are retail trading chart patterns, right? Head and shoulders. The bear flags and the bull flags, I do use those. You guys have seen me use those when I'm measuring my trend. Um, double tops, triple bottoms, stuff like that. Those are just retail chart patterns, right? Well, another one is an engulfing, a bullish engulfing or a bearish engulfing. This would be considered a bullish engulfing, right? Because this bullish candle, this white candle, the body of it is larger than this candle previous to it, right? So that would be a bullish engulfing candle pattern right there. However, I'm not just taking those two, I'm looking at a third candle, right? And based on if this candle was a bullish candle, I would not even be looking at this area. But since this candle is giving me this engulfing of that one, and then this one engulfing of it all, right, labels at that decision making zone, right? So that's how I find my decision making levels. And we can just see, you know, on these levels that are marked on my charts, the consistencies of price moving with these levels, and even on my weekly, like you guys can go back to the videos time and time again. We see these areas getting respected, utilized, liquidity areas being left at them, news folders being generated by them, like just all types of different price action at these, what are they called? Decision decision making levels. That has those first two, actually every word in that has extreme importance for building our perspective and our mindset around how, we're trying to get you guys to view that area, right? And so on my 1 hour, price ran into a decision making level. I go down in time frames, right? And we're able to look at it a little bit more. But when I go down to my 1 minute, what does my 1 minute tell me? Because now what am I looking for? I'm looking for an indication that this is actually nice. This is going to bring me back to, market preparation as well. I personally have not felt super comfortable with taking any type of trade yet. I really want to take I wanted to take a buy a second ago. Um, but I already knew I was late to the party with news, so that was good. But then I analyzed this level, and I'm glad I didn't take a buy because I would have been upset about the fact that I didn't analyze my 1 hour zone. So that's good. I made a leap forward there because I have done that before where I'm like I view news, right, which per the news folder, our inflation rate is getting worse, so that should actually worsen our dollar. Um, and so I understood that. Then I found this area, I saw the inefficiency in price action. So the old me would have just sold off, without being patient because I had the sense of I just wanted to get in, but I just want to have that time to analyze, right? I just want to have that time to analyze because all the volatility is still yet to come. When we're thinking of even tomorrow's news, uh, there's still some news this week that we haven't got to yet, but really thinking about next week and the interest rate cuts, it's going to be a big one. It's going to be a big one, but um, and so 1 hour, and so where are we at right now? Where are we at right now? Right, 1 hour decision making zone got marked. Why is that an important area? Why is that an important area? It's an important area because let's look at a few things, right? So this candle right here, let's get rid of this. This candle right here was the news candle. So this candle came out on news. Don't disregard the news folder. We'll get back to that. But this candle came out on news, right? It gave us all of this volume on our MACD, right? And took us all the way up to this point and peaked out up here, right? At that point, it peaked out. What did it run into? Right? It ran into my 1 hour decision making zone, right? After we got strong bullish volume off of news, we got to a point where our MACD showed us that not only did we peak out, but our volume was gone, right? And what area did we run into? Decision making level, right? That's three really key pieces right there for us to not enter buys. That's it. That's it. I was gonna say I have analyzed these same exact factors before and disregarded my decision making level and have bought because of an initial news move prior to me having a little more knowledge in the macro aspect, right? So I know that that news candle, it doesn't really tell me what it should, honestly, because the inflation rate is going in the wrong, not going in the wrong direction, but it was lower than expected, which we are trying to get it low to bring that value back to the dollar, right? But if it moves too quickly, that depreciates the dollar, right? And so that's kind of what I'm taking into account, the fact that it's lower than the forecast, right? And so this initial spike doesn't really tell us the whole story. And even with it, just aside from that one, we even look at, the CPI. Yeah, that got a slightly better than expected result there. But, as we're seeing an initial move, like I spoke about this last week, live call 256. We were going, it was, I spoke about a live call 256. Um, about lagging indicators, coinciding indicators, and leading indicators. So I would be curious to know core CPI is probably a coincident indicator, or it's a lagging one. No, why I can't type. Look at that. Core CPI is typically considered a coincident or a lagging indicator. So it's not a leading. Remember, leading future, lagging validates a previous trend, right? Lagging validates a previous trend, right? And this right here is kind of beautiful. And so it's either a coincident or a lagging. What that's kind of telling me is the coincident portion will provide me that immediate price movement. But then considering it's a lagging, I need to consider previous data. And so this previous trend that this supported was this bullish move. Because last week, this move here from like right here down, all of this was from last week. Go to live call 256. I we watched this happen. I talked about it the entire call of why we got news, trade balance, right? There was a reason this happened. We got NFP, right? There was a reason this happened, and the indicator that was involved with this move was a lagging indicator. So it confirmed the previous trend, right? And so now we have a lagging and coincident indicator, which lagging confirms the trend, right? What does coincident do? Gives us that immediate movement, right? Gives us that immediate movement in the market. right? And so we saw that happen initially. Like we saw the trend get verified by the lagging indicator. Um, being, let's get back to it here, this one here. So even though it wasn't substantially off of the consensus, it still was bullish, right? And it still showed itself, right? Per that, per that, the role of that folder being a lagging, or coincident indicator. Yes, it did confirm previous data, and yes, it did give us current movement, right? And so aside from that one though, all the other folders are indicating what? That price should actually be going down on the dollar. Like the dollar is still performing poorly, right? And so I'm considering that data right now. And so even before the news came out, we still had the outlook of the poor performance, the negative outlook, we'll call it poor performance, but just the negative sentiment around the dollar, right? And even there's something I want to actually show too, that will show me that the dollar could be potentially losing value, right? It could be potentially losing value. Um, and before I show that, so we got this news this morning, core CPI, right? Core CPI. Oops. I'm gonna get my marker out right here so we can follow along with these. This is the only folder that was bullish for the dollar. The only folder that was bullish for the dollar, right? That folder that is bullish for the dollar is a lagging indicator or a coincident indicator. And what that means is it confirms previous data, and then it also does give us current market conditions, which I'm interpreting that as it's going to give me immediate price action, right? That folder came out right here, and what did we get? Immediate price action and the confirming of a previous trend, right? Because this is the dollar, right? Confirming of the previous trend, similar to last week. Go to live call 256. All right. If you're just jumping on live call 256, we were able to watch this move happen, or at least this move start. Like we watched it start from up here. And I talked about it on that call, along with the news that we were getting, though. I only analyzed DXY that day on 256. I was doing it for USDJPY, of course, but there was a number of different pairs that we saw that effect, right? And why did it affect it in this light? Because of the folder we got. And I'll go back to it real quick. This is Wednesday, September 4th, right? Wednesday, September 4th, right? What news did we get that I was looking at? Import exports, right? Balance of trade. That's what I was looking at mainly. So we were still in a deficit, even though this is green. And what does that say? A better than expected result, right? This is why it is slightly important for us to know what we're looking at. When it comes to this stuff, we can't just take it for what it is telling us, because sometimes it's telling us the exact opposite of what it's giving us. Um, and so this is negative for the dollar, right? Jolt's job openings. I said NFP earlier. NFP was this Friday. So it would have been what, sixth is when we had NFP, but we were going over the news that day, and it's pieced together so beautifully. Is why I'm okay with being patient. I almost made a mistake earlier. I almost did. But I did think to myself, like, come on, Marcus, you've done that before. You're not in a hurry. You're not in a rush to trade, right? There's plenty of time. Um, and so that day I was not executing, but I would have loved my position if I did. And so what did we get? September 4th, the two major folders that showed me that the dollar was losing value was the balance of trade and Joe's job openings. And we saw that directly reflect, right? And now the thing about Jolt's job openings, right? It's a lagging economic indicator. It is a lagging economic indicator. What does lagging mean? It confirms a trend, a previous trend, in not a previous price trend, a previous economic trend. How do we analyze what an economic trend looks like? We can use price action, right? We could also use previous data within that same field, but the reason that we would use it is because we blend fundamentals and technicals, right? We blend fundamentals and technicals. So even though the folder that comes out, it doesn't say, okay, guys, any price action from August 27th to September 3rd will be read with this next folder. No, no. It first of all, it's reading data that has no relation to actual candlesticks and price structure. It's talking economically. But that the data, the economic data that was released prior to it also gave us price action. You know what I'm saying right there? And so when this folder came out, Joe's job openings, it validated its previous trend, right? And so we saw that play out beautifully. And so now we're here, right? Now we're here. So now let's fast forward to today. And we just got core CPI, core CPI, which is a lagging and coinciding indicator. Lagging, going to confirm previous trend, coinciding, just think of something that's, that's coinciding. Um, it's current, it's now. It's something that we should see show itself immediately, right? And what did we see on the news folder? We saw that initial coincident type of movement. And what did it do? It confirmed this previous trend, right? Because we haven't had any data yet that has come out that's confirmed this trend. Because the data that came out here that made this move confirmed this trend. You see what I'm saying? And so that's how we start to piece together each news folder, right? And not just them separately, but how they start to show themselves on the market, right? And we can only know that if we know the coincident, the lagging, and the leading indicators. Just those, if even if we're able to know that there are three different types, and then we're able to take one of these to Perplexity or in whatever AI you use, put a nice question in it, and figure out, is it a leading, lagging, or coincident indicator, right? And so that's important this morning. Why is that important this morning, Marcus? Why? Because it can manipulate what price is actually going to do or should actually do based on all of the factors surrounding it, right? And so that bullish folder can get kind of skewed. In my opinion, that's how I'm analyzing it. Somebody could be analyzing it completely different, right? But intentional time and effort has been put into understanding these. And so I'm just forming my sentiment, right? And I'm just making that available to anybody who cares about my sentiment, right? As Joe Penny um, joined us in the party today. Joe, what's going on? Let's see. Yeah, okay. So that's how I'm viewing that there. That's how I'm viewing that there. So that's CPI, core CPI. So moving forward from core CPI, we're looking at inflation rate year over year, which we saw was lower than expected, indicating it would hurt the dollar, right? But what have we not seen? We have not seen that come in yet. And this is where I start to really enjoy these macros, right? Because even though it hasn't come in yet, the core inflation rate I know is not a lagging indicator. Um, and let me just double check on it. Okay. So it looks like it is a lagging indicator. Let's take a look here. Hmm. That no, that makes a lot of sense. They're kind of giving me some folders up here that would measure the year over year inflation rate. But that does make a lot of sense. Of number three, timing of inflation data, inflation rates, including year over year measures, report on price changes that have already taken place by the time inflation data is released. It's describing economic conditions that existed in the past. So that does make sense. So basically, this entire year thinking about, um, where it started to how it's progressed, right? So it's basically saying and thinking about the Fed's goal, which was this entire time to get the inflation rate to 2%. It's gradually and gradually gotten there. Um, and so that does make sense of why that would be a lagging indicator, which would still, in my opinion, not enough data for me. I was waiting to see today what kind of data I would get from that inflation rate year over year. Um, and it's just not enough data for me today to be able to build my complete sentiment on what price is gonna do here or what price could potentially do. 'Cause I still think, we have some bearish room to go, honestly. Um, just when I think about just the current state of the US. Um, Yesterday there was something that I noticed, and I'm gonna get into it here. This morning's been I've been a little slow this morning. I apologize. Uh, it's just with formulating my thoughts and my analysis, um, and all the moving parts that I want to get out because there was something yesterday that I came across that I want to get into as well. Um, but real quick, as we're seeing the respect of this decision making level, I just want us to focus on the three things that we emphasize, and that's decision making levels, that's inefficiencies in price action, which is my orange box on the chart currently, and that's liquidity areas. And so we see all three of those currently right now on my chart, right? Let's mark them. First is liquidity. Like this is a liquidity area, right? It's at a strong decision making level in the weekly, right? And that is a liquidity area. So that is an area that price can bring this back down to, right? So that's one. Number two is this inefficiency of price action, right? So this orange box here is an inefficiency in price action that was generated off of news, right? Generated off of news. And then the last one here is the decision making level that price is currently respecting, right? So those three key points of that I look at every single time I'm opening the chart, I'm seeing them all develop right before my eyes. I would love to take a sell right now, but mentally, I don't feel comfortable taking a sell right now. I'm just not. Um, and I'm a little slow this morning, waking up and whatnot, and so just I just don't feel right. Entering any trades doesn't change my outlook of what I'm seeing, what I'm analyzing, or anything as just far as that emotional aspect. I don't want to deal with that this morning, right? Because, like I said, I'm just a little slow this morning, so I may be more susceptible to certain emotional factors that I could control normally, when I enter a trade that I may not be able to at this time, right? And so that's an area that I've grown in my trading, in my trading. So, um, but that's kind of what I wanted to take a peek at here really quick. This is beautiful, honestly. I'm looking at my MACD here and seeing how much volume we have already gotten from my MACD since we've made that move up. And then I bet if I go to my 5 minute, right, we'll start to see some correction through that liquidity or decision, the inefficiency area, right? So all we need is for it to correct down to about this level. Um, when this candle and this candle's wick touch, or the next candle's wick, or whatever candle it is, as long as that wick touches one of the candles over here, that inefficiency will end up being filled, right? That inefficiency will end up being filled. Um, but I honestly still think we're gonna go bearish, just because I don't think we've had our significant dropping of the dollar yet, right? I don't think we've had that just yet. I think we'll have that next week, amid some other economic news. But yeah, I don't think we've had our oh my goodness, you guys see that type of move yet from the dollar. Uh, so yeah, I'm gonna take a quick break, um, and then we'll get back into it for another good hour, um, or however long. 7:30 is when the call ends, but I wanted to go for about another hour. Um, but we'll see how it goes. I'm gonna take a quick break, 5 minute break, and then we'll get back into it. I was on mute, but I'm back. I'm rejuvenated, seeing this inefficiency feel, which is so money. Honestly, like the more I think about this stuff, I think about I think about the Forex market, um, the separation from the stock market. Um, One thing that I've realized as a trader, specifically with the Forex market, we will always, always have to deal with news. It's inevitable. It's inevitable. It's inevitable that we will have to deal with news, right? And why does that matter? News normally goes down at the primary time, not only that I trade, but when there's a lot of market movement, right? And so the market, I would actually move a lot different if news wasn't involved. And so when I think of, like manipulation of price action, when, market makers want price to seem as if it's going in a direction. And so they'll intentionally engage with the market to get it to go in that direction, you know, just to get price to a certain level, and have liquidity to sweep and whatnot, and basically to just wipe a bunch of people out of the market. And I think about how some of that stuff is kind of indicated, you know what I'm saying? And news, it's news. News is it. That's pretty much what I have concluded to, and there's so much peace in that because you can't manipulate that information. You can't fool you. There's no way to hide economic data. There's no way to do it, and I love that aspect. I love that aspect of it. Because it keeps us in such safe bounds, right? And so watch this. We're getting this clean inefficiency fill of our price action. We're gonna go over this. So two things here. Where's my marker? We're gonna go over this, and then we're also gonna get into um yesterday's news, right? We're gonna build sentiment and figure out what price is gonna do for the rest of today. And then tomorrow, right? But we're gonna look at this inefficiency fill after it's almost completely filled. That's so clean. Should we no more news for today? All right, let's do this. Let's go back here. This is my 1 minute chart. I'm gonna replay this. All right. So it's my 1 minute chart, right? This is let's look at a few things here. This is 1 minute before news. And what do we see? We see price is kind of in a middle area. Let's go to my 1 hour time frame. Oh, because I want to get rid of that. Let's go to let's go to 5 minute. I want to show something specific. All right, that's cool. So this is 5 minutes before the news. We have pricing literally right in between a middle area. And I didn't have this before. And so this is why, for me personally, this is something I had to grow, an area I had to grow. Even when I get on the market, like I need to take quality time to just gauge the potential areas that price could travel. Because right at this point, the only decision making zone I had marked was this 30-minute one, right? But that's because didn't take the time to add my 1 hour, right? Just couldn't, maybe I didn't see it at the time or didn't analyze it or whatnot, but I did this morning and there it is, right? There it is. So we have price literally in between, like halfway between this decision making level and this decision making level, right? What else do we have? We have this area of inefficient price action, right? Above it. Then we have, some liquidity areas up here. So just a little bit further than we need to go. I can even say we have a liquidity area up here, right? Because this is when that move was generated, right? But ultimately, we have inefficiency and decision making zone not too far above it, right? So we at least have one area for price to travel, right? And then what do we have below it? We have strong weekly level, and we got some liquidity as well. Maybe not as high quality as the other one, but liquidity nonetheless. However, we did just get to this point, right, a day before, and we've moved away from it. So I'm considering that as well. So before the news even went down, I understood the potential areas that price could travel bullish or bearish, right? There is some inefficiency at this bottom here too as well. Um, but like I said, mainly considering the fact that this is a strong weekly level and that it already attracts price strong enough. I don't even need to see liquidity or inefficiency below it because I'm already saying, look, you know, price is attracted to that level because of how strong that area is. Um, so that was prior to news, right? But then we got boom, news spike, right? And so this is kind of when we think about like risk management, right? Like we could play stuff like that and we can only play stuff prior to news is if we build that, okay, if price goes this way, this can happen. If price goes this way, this can happen. And then based off of the data that you maybe have leading up to that, you could kind of gauge what can happen with the market. Um, for me, if for me, I didn't think the market would go up today, right? Mainly because actually I didn't really have a particular idea of what the market would do. I was waiting on the inflation rate year over year. That's kind of what I was looking at to see what could happen, and I was judging the market based off of that. Um, and of course, we don't get the news result until the folder happens, and so it'd be really easy to execute once that happens. Um, but if we just go down here to this 1 minute and kind of see it in a closer live time, what do we see? Right? Look at our MACD. MACD is showing us that we're losing that seller's volume, right? 1 minute prior to this news candle. So we saw that we were losing buyers volume, we had an inefficiency, and we had a decision-making level, right? And so next candle, boom, takes out that inefficiency immediately, balances price. What balances price? News. What imbalances price? News, right? The news balanced price with that buy up, right? So it balanced price on seller's side, right? Sellers generated this imbalance in price, and then it left an imbalance of price on the buy side. So for sellers to go get in the future, right? You see that how that piece together because the market has to operate in this way. It has to operate in this way. And what do we have the opportunity to use to help gauge this stuff? We have news, right? News makes it really simple for us and to remove the noise, right? That's one thing about the markets now. I'm able to quiet so much of the noise, right? So much of it because first I really my analysis of execution, it comes like I have different based on what time of day it is, I'm looking at the market differently, right? And based on what time of day it is, it's confirming different things for me. So like um in the evening, so about an hour to 2 hours before market closes, I want to see it not do what it did the entire morning, at least an hour before, because I want to start to see it slow down, consolidate, get to an area of accumulation, an area of correction. I want to see that probably like an hour, at most 2 hours before the market closes. So like noon, we'll say, right? And then when the market opens, um, I'm not really looking at anything there, but at like 6 o'clock to about 10 o'clock. I'm looking for the market to do the complete opposite for what it did the morning the morning prior, right? And follow along with me on this. The thing about the morning prior to, so like, let's say this evening, right? This evening will be a new trading day. So this morning's movement is a separate trading day than when the market opens up this evening, right? I hope that makes sense. Um, so when the market opens up, then if you're in the US, when the markets open up this evening for Forex, the foreign exchange market, it will be a new trading day, which means everything that happened on today's trading day will be in the past, right? And so I consider that variable. And then, so when the market opens back up from that 6 to 10, I want to see it do the opposite that it did basically from the previous day or the previous morning, is how I'm looking at it. And then throughout the night, I wanted to make a move, right? Now, I don't have a, I don't want it to actually, I don't want to do the same thing it did the morning or the day before. I don't have an actual idea. I just wanted to make a move based on my analysis, right? Because that's a time of day we don't have news for my USD anyways. And so how I'll analyze that time is I'll just want it to like be consistent in its movement, right? Find a move, find a point, and boom, make a move. And then come that morning, I analyze all that information and I correlate it to how it changed or continued from the day before when I traded, right? And then I just do that throughout the week. And then the week ends and we repeat, right? And so that's how I kind of stay up to date with market movements as it moves in and out of sessions, right? And so coming back here to what we were talking about originally, uh, inefficiency was created on news. But when this was created, it was filling in an inefficiency in the past, leaving an inefficiency behind. And what did we see? We did see price try to push back, try to continue up. So, two things here. What do we know about these levels, right? What do we know about these levels? We know these are decision-making levels, right? We know these are decision-making levels, and we know that they act as two things, right? They act as force fields and they act as magnets, right? Decision-making zones act as force fields, or decision-making levels, excuse me, act as force fields, and they act as magnets, meaning they pull price to them and they keep price from breaching them, right? And so when price was down here, right? When price was down over here, right? This decision making level, right, was acting as what? A magnet, right? This decision making level was acting as a magnet down here as price continued upwards, right? Continued upwards. And then boom, gave us this. What did this area turn into? This area then started acting as a force field, keeping price from breaching it, right? So that's price action. So just focus on that with price action, right? But then now we go down here, right? And I want us to bring our attention down here, right? And so on this move up, right? On this move up, boom to boom, right? Boom to boom. Just that to that. Look at our volume, right? Look at our volume down here, right? Strong buyers volume, strong buyers move, right? But what were we getting to as we made that buyer's move? We were getting to our force field, right? And as we got closer and closer to the force field, what what happened down here? We started losing buyer's volume, right? We started losing buyer's volume. Why? Because we're running into a force field. How do we know that? We're losing buyer's volume. How else do we know that? Because of news, right? Because of news. Because we got news that did not support bullish movement. Like this news doesn't support bullish movement. Even though core CPI is as 0.1%, better than last month. Um, in my opinion, my sentiment, we did not get bullish news. We got bearish news, right? We may have got some bullish movement, but in my opinion, we got news indicating that it's going to devalue the dollar, right? And so those three aspects, right? The decision-making level, news, and how our MACD communicates our volume is one reason why I would not have liked to enter a buy on this one, right? And I tell you guys, I like to have, okay, so that's enough pips. It's about 71 pips to my decision-making level. So I would have had room to buy there, right? But I wouldn't have premeditated a buy, or like my sentiment wouldn't have built on a buy, honestly, because I didn't think that would happen because of news. And so we ended up getting to this point, okay? We ended up getting all the way to this point, filling that inefficiency of price action that was generated way back, creating its own area of inefficiencies, right? And so let's mark it. Boom. Inefficiency, inefficiency. Let's see what happens here. Two areas of inefficient price action. One area gets filled. The force field nature of this decision making level still gets respected. The communication of our MACD with our volume still highly accurate, right? We see the sell off. We see the sell off here. We see it get to a bottom. We see it correct itself, and we see that show up, right? We see it. Oh, this is so beautiful. We then see it touch, right, that decision making level at the same time of it peaking and correcting on our MACD volume. So at the same time of this touching our force field, it tells us that buyers are losing volume. It's beautiful right there, that piece together like that, right? And so we get that inefficiency fill. Boom. Area number one filled. Does it have to fill area number two right now? No. It does not have to fill that area right now. But the longer it waits to fill that area, the more confidence I'm gonna have that it is going to fill that area, being that if it continues to not push through this level, right? This decision making level. So let's play it forward. What's happening, right? What's happening? First of all, it's causing us to be patient, right? And it brings me back to I would have really liked the entry back here. Probably that one for a few reasons here. I'll tell you why, and then I'll continue on this. Reason number one is because at this time we still had another area of inefficient price action, right? So at this time there was still that. Let me pull that back up. Right at this time there was still this second area of inefficiencies. Um, all right, all right, all right. So at this time there was just small area, right? Because of that, because price came down there. So small area, but an area nonetheless. I won't even leave that there. So let's not even worry about that. But we do know one thing. There is an area of inefficient price action below it. We know that price has moved on to a strong decision-making level right now at this 1 hour. And then I also see something as well that would catch my eye. And it's that candle structure right there, right? What do I have there? I have a my three candle decision making level on a decision making level. Those for me, I love when I see levels on levels. I love when I see that. Um, so I would have liked to enter a sell there. This would have been um, this would have been an inverse. This would have been an inverse VXT entry right here, just because it's just flipping what I'm looking for, um, and executing on its inverse, right? And so normally I'm waiting for buyer's volume to come in, yada yada yada, take buys. But with all the excuse me, bullish momentum, I'm utilizing my MACD in my areas and inefficient price action to allow me to execute it going in the opposite direction. And Q, man, gave me a golden a nugget about these inverse trades. And we only take inverse trades. And what I mean by that is we only take the opposite of what we're normally looking for on our entries when it supports our trend, right? And so in this case, USD JPY has been on a bearish trend. So us executing, me executing on an inverse would have been money, would have been money. Um, and I'm actually really proud of myself because like I haven't felt the best this morning. Um, and so I'm just proud that I didn't take a buy or a sell. Because that's growth, having that discipline not to enter at all. Um, but I seen some stuff from Price just now. This is beautiful. But yeah, my entry would have came there. You know, the respect to that decision making level, our MACD, what it's telling me, knowing that I have inefficiencies below it, and then a zone being created on a zone, that would have been a beautiful entry. We'd probably be looking at a very 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 comfortable um, position size here. So entry there, stop loss. We could probably find something a little bit higher than that. Stop loss. We'll probably put it at this level here. I like to find, a stop loss at when it's at when I'm entering on a decision making level like this would have been. I'll just look for a price, a recent high above it. So it's called 142.575. And then I like clean numbers, 142.575. So that'd have been my entry. And then I'd have been wanting to take that through the inefficiency fill, right? So that'd have been my entry. I'd have risked 8 pips to get 68, right? And I'm gonna just write out the three things that I like from here, right? So we have decision making level, respect, force field, right? We have in, inefficient price action below, right? We have MACD reading the volume, and then we have news that did not support the DXY to move bullish. Those reasons right there is why I would have entered a sell right here. Wait, one more. Then we had zone on zone. This is stuff I look for all the time, right? Just in different ways, right? I like for us to be moving away from decision making levels. In this case, we were respecting it. I like moving towards inefficient areas of price action, right? In this case, we were gearing up to move towards it. MACD is something consistent. News we'll never get rid of. I'm always analyzing DXY, and I love my decision making levels, right? So that would have been these aspects right here would have been why I can't spell, why I entered that. And let's let that play. And for all my people that are ahead of the game, what happened here? What's all this? What's all this stuff? Da, 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 da. Inefficiencies in price action. Inefficient price action, right? What do we need to come in here to balance this area of price? Exactly what we needed. Buyers. Is there a minor area of inefficiency from this level, 142.42, to this level? Yeah, very minor. Fill nonetheless, right? And we can just see how it continuously does it, how price continuously balance balances itself out. Now it doesn't do it every a complete 100% correction every single time. It does not, especially when it's not within the trend, which is why shout out my boy. Shout out my boy Q. That is a nugget right there, right? When it's in the trend, we can be really comfortable knowing that it will even fill the most minor areas of inefficiency within that trend, right? But something like this, right? So look, this is part of the trend, right? So I don't want this to necessarily, like, I'm not necessarily saying this part has to get filled, right? Because for this to get filled, we would need to be going bullish, which would be going the opposite of the overall trend when we're looking at USD JPY on a larger scale, right? This is just the 1 minute, right? But when we're looking at the USD JPY on like the hour, right? This is the trend. This, oops, like we can all agree that from this top here to this bottom is the trend, and nothing, and it has not been broken yet. There was some ranging in here, but the trend has not been broken yet, right? And so this would be, look at that. Damn, that's beautiful. That's so beautiful right there. Let's go back right here. And so this is the trend. For price to move bullish would be moving opposite of the trend, right? But even then, it still went and filled inefficiencies. But then again, now I would even like to enter again if my account size allowed it, because we're moving with support of the trend, right? And then still executing on these inefficiencies, right? So realistically, this is another entry if my account size allows it. Stop loss would now go to my decision making level and probably the high of right there, so that if it does come in this area, that decision making level can still respect, and possibly still hold my trade there. And then same thing, inefficiency fill, right? So I got one trade, I'm risking 8 to get 60. I got one trade, I'm risking 27 pips to get 47, right? Play that forward. And of course we saw price action, but look at that. Because of these one, two, three, four, five, six factors, right? And only, let's see, like these are all really just simple factors that we're considering here. I would say the news being a really important one, because it gives us something that the chart is not. You know what I'm saying? Like everything else is from the chart, but the news is one of those things that is completely separate and it's its own thing, right? But clean fill right there. And now we're seeing, USD JPY just falling, right? Just falling. We haven't seen that come in on the dollar yet, but where have we seen USD JPY lose its strength, right? So this is JPY. This is beautiful, guys. I need to start putting on Math. I keep Mataf. I do forget, pulling on Mataf back in the morning. We used to use it a ton. Gonna get back into it though. But look, look. Come on, let me show you this. This is actually really bothering me. Full screen, please. Thank you. I still can't see the time. All right. I'm trying to see the time of so I can pull. All right, cool. 5:30. All right, cool. So, what do we see here? We see very large buying candle from the dollar here on 5:30, which is when the news came out. Um, what did we see on USD JPY at 5:30 when the news came out? Right, large bearish candle. But what did we know about the USD news? We know about the USD news that it wasn't substantial in the fact that it was going to send us in a bullish um, phase. Like it wasn't that substantial. Yes, core CPI came out 0.1% greater than the expected result. But we saw all the other factors indicating bearish on the dollar, and mainly that inflation rate one is kind of what I was looking at. So that was indicating that the inflation rate was lower than they expected as far as the progression year over the year, which you would think, okay, Marcus, the inflation rate's going down. Isn't that better for the economy? Yes. And so this is my opinion, right? Yes, it is better for the economy, but from what I'm understanding is if it gets too low, like too quickly, then there's no room for the Fed to go to fix those rates, right? You know what I'm saying? Like it can't get too low too quickly. That's the thing. Um, and so what would have been ideal was it to be the same as the forecast or even point 0.1 better than the forecast, right? So instead of being point 0.1 below it, point 0.1 better, that might have impacted the market a little bit different. But we saw that initial move there from USD JPY or from JPY when the dollar moved against it strongly. But then we saw it correct off of that, right? Right about here. So this was 5:30. This was 35, 40, 45, 50, 55, 6, 5, 10, 15, 20, 25, 30. So literally an hour later, right, we start getting this strong USD movement, JPY movement, excuse me, right? And literally at 6:30, right there, what did we get? That's when we got our final move, right? That's when we got our final move. That's so clean right there. I'll be right back here. All right. So super clean there for from Price this morning. I'm actually a little upset. Of course not just because of the move, um, but just my morning, right? Like I was slow getting up this morning. I was so ready for this morning too. Um, and even though I was on during this time, like I told you guys, I just was not, my mindset wasn't in a comfortable state to feel good about taking a trade, right? And I don't want, because what we run into when we, you know, act outside of our usual protocol is we just increase our risk. We increase our risk in other in at other times, and you know it's not a day by day basis that we're trading. It's it's over a long term scale. So the day by day nature of it, just got to live with. Just got to live with. So I just have to chalk that one up. I have to eat that one because that was 111, 118, uh, 97. So you're talking about two entries right there that would have got you close to you know over 200 pips this morning off two entries. But one movement, if you just took this first one, you would have risked 8 pips. I would have risked 8 pips, so this would have been the entry I took. And I'd have got, if I would have kept going, if I'd have, stayed in it, I would have even liked it to move to this weekly. Let's see if I go touch that, but definitely would have secured 68 from it on the inefficiency field, take some partials on the way down and let it do its thing on the rest. But very, very clean entry nonetheless this morning right there. Um, and so probably hop off here in a few, but just to regroup and kind of bring it back here a little bit. This Matif platform could be better, but shout out Matif. So what happened this morning? News wasn't crazy, but it did give us this inflation rate year over year, which was what I was looking for. I was waiting for. It is was a little bit lower than expected. So one thing I can see happening is these rate cuts not being cut so deeply, because if that does happen, then this inflation rate could actually um, become a lot worse. And that means what I mean by that is there could become too much money supply, because if the Fed cuts the rates by 50 points versus 25 points, that does increase the money supply. And so we're trying to stimulate the economy. Inflation has been hurting the economy, so we want it to go down. But if it moves too quickly, it it hurts the economy better more than it helps it. Um, and so all the factors, the manufacturing, when I think of now when I think of inflation, I strictly think of a few things. Are people spending? Are people working? Are people um, producing? Right? Because if people are spending, or if people, let's reverse that. So if people are earning and working, then people are spending. If people are spending, then people are producing. People are producing, then people are working, and people are working, then people are spending, and people are, um, and so that's kind of how I think about it in the inflation aspect. So yes, we would want that to go down. Um, the inflation number year over year. excuse me. But once the Fed chooses to decrease the rates next week, that should start to stimulate the economy in the way that we want it to go. Which is still I don't want the point to be missed here that I don't understand that this is good for the dollar. It's just lower than they expected, right? Which means it's cooling off quicker than they expected, which means, okay, maybe they don't have to stimulate the economy as much as they thought, right? So that's kind of how I'm thinking about that there. Um, but let me get into yesterday's news real quick too, before we get off here. Um, this right here is something I want us to start paying attention to. 40-day bill auction, 3-year note. Um, we can pay attention to that across any country's currency, across any country's folder. They're always on my FX book reporting notes and auctions and bills. Why is this important? This is important because whatever the previous result is, if that number is lower, then that means there will be money that is pulled away from USD bill auctions, which means that devalues the dollar, right? So these are mostly always low impact folders. There's one folder today that is not a low impact folder. That is one of our like notes, bills, auction, government securities is what they're called, right? So start to analyze this, and then I want to know what you guys find out from it as far as just there's one thing I want you to analyze. Like I said, look at the previous, tell me the percentage, look at the actual, whatever the percentage is, right? So in this case, we would have saw this affect the dollar in a negative way because it went from being 5.12% interest on this auction or this bill here to 4.98. This went from 3.81 to 3.44, right? So it's gone down in both aspects, meaning bearish for the dollar. That's a negative for the dollar, right? And so now we have today 17-week and 10-year note, right? We want to analyze the fluctuation of those. I can assume that we're going to get these numbers on the actual less than they were here, right? And so I'll be looking at that. And even stuff like this, foreign bond investment, right? For USDJPY, right? What would we want from these? We would want these to go bullish, right? We would want these to move bullish, right? And so that's kind of what I'm analyzing there. There's a few other things in terms of JPY that I'm not going to get into at this time, that I'll get into at a later time when I'm more familiar with them. But yes, the government securities, we can use that to gauge how that's going to affect our dollar. Um, Even though they appear sometime as low impact folders, we can still use it to gauge how it's going to affect the price of the dollar. Um, but other than that, that's pretty much all I got today. Was a you know a slow day, honestly. Um, a slow day for me. I felt it. I felt it in my analysis. I felt it in my decision making. I felt it in my thought process. Um, comes back to just the sleep, um, just the quality of sleep that we need night in and night out, and the consistency of sleep we need night in and night out, along with just feeding our body the right things, whether that's food wise, whether that's beverage wise, just that all contributes to this. Like it all plays a factor, honestly. And when we're thinking about our trade plan, when we're thinking about risk management, I correlate everything to risk. Everything that if you can do something like sleep better, to improve your decision making, that decreases your risk because it improves your decision making. If you can do something like wake up a little bit earlier so you can take time to prepare for the chart, that reduces your risk because it improves your analysis because you've now spent time outside of actual market execution and analyzing, so you already know what you're kind of looking for, right? And that's why I normally like to my so this is my ideal morning, right? My ideal morning is I wake up at 4. My ideal morning is I wake up at 4 a.m., right? Um, get out, get the lights on and whatnot, like in the living room. That's if there's no sun outside, ideally to take a step out, put my feet on the ground outside for, 5, 10 minutes, come back in, take a look at my trade plan because in that trade plan that is actually provided by the Bloom community, and I actually utilize it. It's a devotional and 10 things we can basically say back to ourselves that keep us balanced. Um, so I knock that out. Knock out some push-ups. That's if going outside didn't get me high. Sometimes I'm really excited about things, so I'm already able to get myself awake and going without caffeine or anything. Um, but by around that time, it's maybe around 4:30, closing in on 4:45. And by 4:45, like I want to be on the charts. Like I want to be already looking at the charts, okay, looking at news, okay, doing my top down analysis on my pairs, okay. Just I want to be already like ready to execute basically by 5 a.m. And that's an ideal morning. And I want to be successful. So every freaking day, every single day, I want to get on the charts under my ideal morning, right? And so when I don't do that, I'm increasing my risk, right? And what I've done in the past is know that my risk has increased from what I have not done and still execute. And then I'm ending up, living with the results, whether they're good or bad. Um, so there's just a few of my thoughts there. So we'll be back tomorrow, same time. Me and Q will be on. I'll be tons better tomorrow, and I'll actually be ready to freaking execute my positions. Because there was some money that I left on the table this morning, and that is not what we intend to do. We don't need to take every trade, but we do need to give ourselves an opportunity to take some trades, um, because we can analyze and do all this stuff all we want, but if we aren't putting it to the test, um, it's pretty much next to useless. But other than that, don't forget, the longer that we do this, the better that we will become, no matter what it is you're currently struggling with right now in the Forex and in the analysis, whether it's technical, whether it's fundamentals, whether it's emotional, no matter what it is, the longer you work at improving it, it will get better. I can tell you guys, like, the confidence I currently have in my ability, like just strictly talking about my skill and knowing that I've intentionally developed it, where I'm currently at right now, I would not be able to have this peace of mind about my trading if I did not spend the time with it. Like if I just only traded, like just only got on the charts and took positions. But no, it's it's actually really hard for me to go throughout my day and not think about this stuff now. Like seriously. So the more we spend time with it, the 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 more simple it will become. Um, and the more that we'll feel comfortable in the sentiment that we build and really start to adapt to each circumstance under a certain foundation, but being able to adapt because the market is random and we have to be able to adjust with it. So, but other than that, I'm gonna go ahead and get out of here. About 7:47 here. News tomorrow. Be on the lookout for those 42 minutes. There's a 17-week bill auction. So we'll want to analyze how that comes out. The 10-year note auction is what I'll probably put something in the Discord for that come 10 o'clock. Whenever I see that come out. Tomorrow we got PPI, we got unemployment info, and then we have a ton of stuff on government securities as well. So tomorrow should actually be an even better day. But this entire month, like for the rest of this month, we're gonna have plenty of opportunities. But other than that, I am out, and we'll see you guys tomorrow, same time, same place. Joe Penny, always a pleasure of you, a pleasure bringing your 2 cents on this call. All right, I'll talk to you soon.